In the ever-evolving world of investing, where markets can be as unpredictable as the weather, finding a strategy that consistently outperforms the majority is the ultimate goal for any investor. Enter Peter Lynch, the legendary money manager who not only mastered the market but also shared his simple yet effective strategy. In this video, we will delve into Lynch's time-tested approach, exploring how it can help you outperform 99% of investors and achieve your financial goals. Peter Lynch is a name that resonates with anyone familiar with the world of finance. Serving as the manager of the Fidelity Magellan Fund from 1977 to 1990, Lynch achieved an unparalleled track record. During his tenure, the fund's assets grew from $18 million to a staggering $14 billion. What's more impressive is that he consistently outperformed the S&P 500, averaging an annual return of approximately 29%. The question is, what was his secret? Lynch's strategy can be summed up in a few key principles, making it accessible to both novice and experienced investors. Let's break it down. 1. Invest in what you know. Peter Lynch's investment philosophy is refreshingly simple: invest in what you understand. He advocated for putting your money into industries and companies you are familiar with. The rationale behind this approach is clear. When you comprehend a business, you can more effectively gauge its potential for growth and make wise investment choices. Lynch's famous advice, "If you can't explain it to a 10-year-old, don't buy it," underscores the importance of keeping your investments straightforward and comprehensible. By adhering to this mantra, you reduce the likelihood of taking unnecessary risks, avoid making impulsive decisions, and enhance your chances of long-term investment success. In essence, the key to Lynch's strategy is to keep it simple and invest in what you know best. 2. Long-term perspective. Peter Lynch's investment wisdom includes the importance of having a long-term perspective. Instead of constantly reacting to the ups and downs of the market, Lynch advocated for patience. He believed that successful investors should stick with their quality investments over the long haul. This strategy not only reduces transaction costs and capital gains taxes, but also allows your investments the time they need to flourish. By resisting the urge to make frequent trades based on short-term market fluctuations, you give your investments the opportunity to weather the storms and benefit from the market's long-term growth potential. In essence, Lynch's emphasis on a long-term perspective encourages stability and can lead to more favorable investment outcomes over time. 3. Do your homework. Peter Lynch's approach to investing was grounded in the principle of doing your homework. While he encouraged investing in familiar businesses, he equally emphasized the need for thorough research. To make informed investment decisions, it's crucial to delve into a company's financials, gain insights into its competitive advantages, and stay informed about industry trends. Lynch was known for the piles of annual reports and financial statements in his office, underscoring his dedication to diligent research. By thoroughly understanding the companies you invest in, you can assess their growth potential more accurately and make informed choices. In essence, Lynch's advice highlights the importance of combining familiarity with in-depth research to build a successful investment portfolio. 4. Be contrarian. Peter Lynch's investment philosophy included being a contrarian investor. In simple terms, this meant having the courage to go against the crowd when you had a strong and well-founded belief in a particular stock. Lynch didn't shy away from investing in companies that were currently unpopular, but had the potential to stage a comeback. This contrarian approach often led him to discover hidden gems that others had overlooked. By being open to opportunities that others might dismiss, Lynch was able to uncover valuable investments that contributed to his impressive track record. In essence, being a contrarian investor requires the confidence to follow your convictions, even when they go against prevailing market sentiment. 5. Keep an eye on the fundamentals. While Lynch believed in investing in what you know, he also stressed the importance of analyzing a company's fundamentals. This includes looking at key metrics like earnings growth, price-to-earnings ratios, and debt levels. Lynch's strategy wasn't about blind faith, but rather informed decision-making. Now that we've dissected Lynch's approach, Let's see how you can implement it to potentially outperform 99% of investors. Begin by identifying the industries and businesses you have a natural affinity for. Whether it's technology, retail, healthcare, or any other sector, focus on what you understand. This will be your circle of competence. Once you've identified your circle of competence, start researching individual companies within that sector. Look for businesses with strong financials, competitive advantages, and growth potential. Familiarize yourself with their products, services, and market positioning. Next, maintain a watch list of potential investments. These are the companies you believe have the most promising long-term prospects. Keep an eye on their performance, news, and quarterly reports. Remember Lynch's emphasis on the long-term perspective. Avoid the temptation to constantly buy and sell stocks based on short-term market trends. Instead, invest with a multi-year horizon, allowing your investments to compound over time. While it's crucial to invest in what you understand, don't shy away from opportunities that may seem out of favor. Lynch famously invested in Dunkin' Donuts when others were skeptical. If you've done your homework and believe in the potential turnaround of a company, consider taking a contrarian approach. Keep yourself informed about the companies in your portfolio and any developments in your circle of competence. Lynch's dedication to research paid off, and staying informed will help you make informed decisions. To illustrate the effectiveness of Lynch's strategy, let's look at a few case studies. Lynch's belief in investing in what you know led him to Walmart. He recognized the retailer's growth potential and understood its business model. Lynch's investment in Walmart saw impressive returns over the years, highlighting the power of investing in familiar businesses. Lynch's willingness to be contrarian paid off when he invested in Dunkin' Donuts. At a time when many doubted the company's potential, Lynch's research and conviction led to significant gains. Lynch's dedication to research cannot be overstated. His ability to understand a company's fundamentals was a key factor in his success. By following Lynch's example and thoroughly researching your investments, you can make more informed choices and increase your chances of outperforming the majority of investors. In the world of investing, simplicity often triumphs over complexity. Peter Lynch's strategy, characterized by investing in what you know, maintaining a long-term perspective, and diligent research, offers a powerful framework for success. By identifying your circle of competence, conducting thorough due diligence, and embracing patience, you can set yourself on a path to potentially outperforming 99% of investors. Remember, investing is a journey, and with Lynch's timeless wisdom as your guide, you can navigate the markets with confidence and conviction.